Welcome back. You're still tuned into Halftime Report. Let's talk about the real estate sector. Equity capital inflows into India's real estate market rose 14% on a YY basis to a record high of $10.2 billion in the first 9 months of 2025. In fact, according to Equirus, real estate continues to be the most preferred asset class for investors in the first half of 2025 as well. To discuss more, we are now joined by Vijay Agarwal, lead real estate and infra at Equirus Capital, and Anshuman Magazine chairman and CEO, India, Southeast Asia, Middle East and Africa at CBRE. Gentlemen, good morning. Thank you so much for joining in. The last day of 2025, so there's so much to talk about in terms of the recap for 2025 and the outlook for 2026 as well. Anshuman, let me start with you. What were the big takeaways as far as the deal landscape in real estate is concerned, equity flows as well, which are the sectors which contributed? And do you expect the activity to pick up even further in 2026? And which segments do you think will contribute now?
Great. Thanks for having me. This year, 2025 has been a record year for investments in real estate. Close to $14 billion expected by even this calendar year. This is unprecedented. And large part of this money actually went into I would say 47% approximately went into buying land. The rest really went into core asset, which means income producing assets, primarily office. 30%, close to 30% is in the office sector. As you know, that has performed really well. And the rest, of course, we saw some investments going into data center, hotels, and overall, this has been a great year. Also, this was a record year for office leasing. Close to 84 million square feet of office space is expected to be taken up by the end of this year. There's still a few days left while we get all the data together. And this is marginally about 4-5% higher than last year because the base was quite high. So yeah, 25 has been a great year. If you look at the last 3 years in India, more than 225 million square feet of office space has been taken up. So yes, it is great, and we are hoping the momentum will continue in 26. Although the percentage increase in these numbers may not be higher in 26 because the base is higher, but even if we increase it, what is expected at 4-5-6%, it will mean a lot of activity in the investment side in real estate in 26 even.
Anshuman, would it be the same sectors, data centers, hotels, hospitals, which would lead to that increased activity?
Yeah, see, what has happened is the large part, like I said, money is still going into residential and mixed-use development because that market has been good. So money normally flows in where, of course, the returns are higher as well as faster. But India's real estate market, one of the big strengths is its office market. A lot of the money, because the underlying occupiers are multinational companies, the yields are stable, and you're investing in core, so you're not taking development risk. I think that will continue. But the additional one, which will expand, no doubt, like you mentioned, data centers, we'll see more investment going there. We'll see more investment going to hotels and hospitality. This year, as you know, there's a big bounce back in the hospitality sector. And of course,
Right.
Healthcare. Healthcare is a major one, which we're already seeing a lot of investment happening,
Okay, all right. Just hold that thought, gentlemen, because we do have some important news which is coming for walk hard, so that stock should come up for you. It spiked up on the back of news that the European Medicines Agency, which is basically the European regulator, has given an accelerated assessment for WCK-5222, which is basically Xenic, that antibiotic drug which they have already received US FDA accelerated approval for as well. So that's the reason why you're seeing walk-hard spike up around 3% at this point in time. So important news coming in there, where after the US, it is Europe which is given accelerated approval for this particular drug. But Vijay, just wanted to narrow down on the residential market and one sub-segment of the residential market, which is basically your luxury as well as your ultra-luxury segment, which did see a strong amount of demand in this year, at least for the first half. Are you seeing that kind of momentum in terms of prices as well as volumes going into next year?
Hi, thanks. See, I think there is little bit slowdown on this luxury and ultra-luxury segment. Across all the markets. Some micro markets are doing well, but some markets we are seeing a little bit slowdown. which may be reflected in the next year's results, maybe H2 results of the companies. H1, we had a very solid results from all the players, but the channel checks are saying that there's a slowdown.
Okay. Anshuman, I just want to pick up the point that you were talking about. Data centers, you expect that to do well. GCCs, you expect that to do well. Overall, we had a discussion today on data centers, and the opportunity seems to be large over the next couple of years. Could you just highlight in terms of where are you seeing these big opportunities for data centers as well as GCCs? Is it more tier 2, tier 3 where we'll see more development coming in, or even metro cities like Mumbai currently where there are more data centers is where the growth will come from?
The data centers will continue first to develop in the main cities. Mumbai, Chennai are major cities where data centers are coming, but we will see activity in Bangalore, Noida. It'll pass, but it would have to be because, as you know, data centers are two, three things. One, they are highly capital intensive. Number two, they need a lot of power and water. And everywhere, most of the cities and states sometimes do not have the amount of power and water you require. And also the investment required, some of the investors may not want to put in those tier 2, tier 3 cities. So the data centers, there will be a lot of investment going on, but the speed of development of data center, for example, are not going to be like logistics, where you can build a warehouse in 9 months and get running. Here, because of the capital investment and also land acquisition, etc., it takes longer time to develop a data center. But the fact remains, we are still, as far as the data center is concerned, we're still a small market. So next 4, 5, 7 years, we'll see major activity and billions of dollars will come into data centers. You mentioned global GCCs, the Global Capability Centers. That's what is driving our office market. And in going forward, also the global capability centers, the existing companies who are already here are expanding substantially, but we will see new companies coming in. In fact, in spite of so much talk about global capability centers, there are still many firms in America and Europe who have still not offshored into India or have not expanded on their own. They're given to third-party service providers. And what I expect going forward is that this market is only going to expand. And it will actually, because our base is high in the office sector, it will, even if it sustains or slightly increases from the base today, it will be huge activity in the office market.
Okay, take that point. Vijay, quickly, you also mentioned that in last 3 years, REITs got the highest amount of funding, followed by large caps, then we had mid caps. Do you think 2026 will be the year for REITs? What about some of these big developers in the residential space as well?
So REITs definitely, there are many developers who can launch their REITs. Maybe I think there are 3-4 developers who have a size and they can launch the REITs in coming next 2 years. Residential players, we are also seeing there are players from Bangalore, Chennai, like Casa Grande is coming from Chennai. Bangalore, there are 3-4 more developers can come for their IPO in the capital markets. Then NCR region, Mumbai region, there are few developers who have a good size. They can also plan for their IPO.
Okay.
I think tier 2 and tier 3 cities, we will have a challenge because they will not have a scale to get the IPO listed.
Okay, all right. Anshuman, quickly then, we've spoken about the places where you could probably see high growth, but Vijay is, alluding to a little bit of pressure in the residential market, if I'm not mistaken, going into next year. Would you share that sentiment that maybe prices could possibly stagnate? Do you think there's a possibility of a correction in prices?
That would depend on the city. Today, the way our market is developed, you can't put a general comment because, for example, in places like Gurgaon, where the prices have gone up significantly up, or parts of Mumbai, there could be a slowdown in price increases. There are other markets where there is a shortage of supply in prime areas, so you'll not see prices coming down. But overall, real estate, like any other sector, is cyclical. We have had a great run for a few years. It is inevitable that growth is never perpetual. So it's inevitable things may slow down in certain micro markets and residential, especially where the prices have gone up significantly up since last few years. In fact, in a short period of time, we have seen, in some micro markets, exponential increase in prices. And obviously, they're not sustainable. But overall, if you look at the residential demand, I think it is here to stay. There would be slowdown in some markets. We can't avoid that,
Okay, Anshuman as well as Vijay, thank you so much for joining us this afternoon. Hope you all have a great New Year as well. Happy New Year to both of you all, your families as well as your team as well. But on that note, we are going to take a very short break. After the break, we're going to come back and Manisha Gupta will be in conversation with Saurabh of PNG Jewelers. So we'll wait out for that conversation.